Good morning. Good morning. Good morning. How's everybody doing this morning? Hey James, what's going on? How you doing? Good morning. Hey Jiraj, Lonigan, how you doing? Hey John, Rasto, how are you this morning? Well, folks, hey Jen, the other John, how are you? Well, another morning, another gap. Hey Juan, chart replays are good on the weekend. 2021, wow. Any of this price action remind me of back then? You know, I was on a phone call before I started this YouTube, and I was saying after 33 years in the business, I don't remember. I was trying to remember what was the year that we had that short squeeze in the summer? It wasn't last year. I think it was 2 years ago, maybe 3 years ago, right? And it all starts to meld into one. This price action is very typical of when markets get way too short, right? So welcome everyone to the Trading Syndicate. I'm JJ. It is Monday, the 28th of July, and we've got another gap. So there was absolutely nothing for sale in the opening auction, and the market gapped up when it opened Sunday night at 6 p.m. Eastern Time. So, a little choppy, but creeping higher, right? So what we call this overnight inventory is 100% long. Let's see if we get any kind of liquidation. If we do get any liquidations at all, we'll be looking for 64.48 to the downside. There's a bunch of stops here. We'll go take a look at them and get into it. Yeah, so trade deal, gap up. Here's what the market looks like on a detailed look on the TPO charts. Now we are liquidating inventory lower, which is nice. So you just use the lower stops as targets. The next stop will be 51.5. And let's get our levels done here. So my balance this morning was 48 to 50 and a quarter, tiny balance, right? It's because we have a tight range, right? And then double it to the upside, double it to the downside. We went into 4 times profit, right? Found sellers finally at the top here at this 58 level. And now we are liquidating it a little bit. Hey, Raj. Hey, Travis. Hey, Mr. M. How you doing? So let's see here. Hey, Avalon. How does my trading differ between the EU Open versus the New York Open? Uh, I have to be more caffeinated at the New York Open. Got to be quicker. That's really all there is to it. My trading is always the same. Trades are based on two things, right? Trades are based on lack of supply or too much supply. So if there's a lack of supply, you go long. If there's too much supply, like now, and prices being competitively sold lower, right, you take a short, right? This would have been a great area to take a short in that 64.57 area, down to 54, and then down to 52. So just generally, when the New York market opens, um, just make sure that you're fast. If you're not a fast trader, I do not recommend trading the New York Open at all. If you're a new trader, I don't recommend trading the New York Open at all. I recommend allowing the market to open, build out some structure, and slow down before you take it. Hope that helps. I don't recommend that new traders or traders that aren't profitable trade the New York Stock Exchange Open because it's just too much information for you to process and execute on. Hope that helps. So we hit 52 and a half, stopped, starting to reverse. So it's pretty obvious here. You can see there's a cost basis here, there's a cost basis here, right? This is our accumulation into distribution, which brought in buyers, and then we got that move up. So when we came back, we came right to the top of that cost basis and stopped selling. And now we're starting to reverse. Let's see if we can get up to 54 and 3/4. Oh, thanks, James. Yeah, Bill Perkins was a good interview. That was a long time ago. We had a really nice podcast on last week. I think Ray's going to put it out with Hunter Horsley of Bitwise. That was that's always interesting. Learning about the crypto markets as they continue to evolve. How's the coin of bitterness today? 119 and a half, right? That's not bad. Anybody take any trades this morning yet? Big data this week, yes, yes. Federal Reserve decision, earnings, tariffs, month end, NFP. It's like a. Do you guys remember the 90s with the mosh pits? It's like a mosh pit of data. Just get in there and go slam dancing. That's why you got to really watch your trading this week. It's nice to see we finally had some selling at 58. We just ran out of buying, so we just started putting it on sale. It's not the fact that there's a lot of sellers, there's just lack buyers, so we put it on sale here and let's see if this catches a bid. You'll know if we get back up over 54 and 3/4. Yeah, I would say this week being month end, be very, very picky with your trades. So here's my old man warning, okay? Here's the JJ, you know, I got shoes older than you, old man warning for the week, okay? Do not make dumbass decisions this week. Take trades that only make good business sense. If you don't know the difference between a trade that makes good business sense and a trade where you're just screwing around hoping to make money, DM me, right? Come visit us at thetradingsyndicate.org. We'll teach you, right? We'll teach you how not to lose money. I am convinced that the end of the month, right, every month end is when probably whew, at least 50 to 60% of retail traders blow their accounts. Now, there's a reason for this. At the end of the month is a time where professionals are what they call risk off, which means that they've made their money for the month, and what they're trying to do is get through the end of the month without giving back all their money. So they're cautious. Retail traders are desperate at the end of the month to pay their bills, and they think they can get it from the market. So they go in and they overtrade. They take trades that don't make sense, the hoping and wishing and praying trades, and they just get eaten alive. So Thursday is the last trading day of the month. Wednesday is month end, right? Be very careful at the end of this week, okay? And going into this week. Now, the market, if you have, you got to have a little common sense, okay? So when you look at the chart and you see a market that's got a gap in it on a Sunday night open, you're like, ooh, something's a little weird. Then you go and you look at some of the price actions a little choppy. There are trades, right? But you have to be selective about it, right? So, John, yeah, there are trades to be had. But now is the time, John, whether you're going to be a professional and do this, or are you a sort of weekend warrior, right? So what you got to do now, John, is you got to learn the difference, right? Now is the time to buckle down and watch, right? So instead of thinking about trades, what you need to be thinking about is what's going on and how do I learn what's going on right now? That's the sort of mindset you should be having. You shouldn't be in the mindset of, oh, can I hold trades longer? Can I be taking trades now? You should be in a education mindset. That will take the pressure off you to make money. Once you take the pressure off, you'll be able to actually observe without having attachment. As soon as traders get attached to an outcome, they're done. Especially if they lack the knowledge to figure out what's going on. There's 54 and 3/4. So as we came down here, what happened? Right? We came down into a cost basis. A cost basis is simply time and volume traded. Does that make sense, John? So now that's a piece of market information that you've gotten. This is like reconnaissance, right? So now you know that they stopped selling at 52.5. Now you're looking to see where they engage selling. Does this make sense? This is what you should be focusing on. Not in the TA. I don't understand. You're not on the call? Okay. So see here at, oh, damn, hit the wrong button. Where I drew that line where the sellers were, they front ran it. Right? So now we know that there's a seller at 55.25. Right? Good. Yeah. Observation is going to be good. There's going to be a lot of stuff to observe this week. Right? It'll be a good learning week. Might not be the best earning week, but it'll be a good learning week. Right? Why did I mark it? Because the top of the candle, that's a great question, Mr. M. The top of these candles are where the sellers initiate. So I had it marked here, and then I zoomed in. I didn't see that top. Otherwise, I would have marked it there. And you'll note that the market came right there and stopped, turned around and went down. Now, if it gets above this level, do you see how there's a seller? Do you see how they initiated? Look at that. Doesn't have to do with a proper high. All you got to do is look at the top of the candles on the way down, and when you get back up there, right, you are going to probably see that they will sell again into the market. Hey, Moran. Thoughts on using previous day high, low, close? Yeah, those are all great. I have them all marked off on the chart. Right now we're gap up over the previous day high, so it's not really going to help us until we get back down there, Avalon. But those are areas that everybody looks at, so there should be some responsive buying. Mr. M, do you understand what I'm saying? This is a really important concept that you guys should be focusing on. Okay? The top of the candles are where the sellers are going to start selling again when you get back up there. Why is that? Because they sold there before. So they will have inventory at that level. If they don't have inventory, that means that they have seen buyers and they will raise price. All right? So when you get to that level, think about it like a glass door. And if the sellers see that buyers are lining up, they'll raise price to take advantage. If the sellers see that buyers are kind of walking away, they'll go back and nail them, right? So they can fill them. So if you know that there's sellers at 55 and a quarter, I try not to do that, Mr. M. In the back of my mind, that's there, right? In the back of my mind, that's there. But I try not to bias myself. So I always just wait for the reaction. You would think, but the higher the time frame, there are more people parked at that level. Yeah, John, they initiated there, and they initiated there, and then they initiated there, right? See right here? That's where it started. But then as the market goes lower, John, they initiate at lower levels. Why, John? Why? Think like a seller. You're selling and I'm selling. And you just don't have one contract, John. You have 1,000. So if the market goes lower, you're going to have to initiate at lower prices, right? So all this does is help you when you're long, right? If you were to go position long, right? Say you had bought a little position here. As you get up here, you know that you are going to encounter competitive selling. So you're not the only person who's going to be selling. So you can manage and govern your expectations, right? Because a lot of traders will go buy something and go, oh, it's going to go up 30 points. Oh, well, how do you know that? Right? You don't. Right? Because if you know that there's going to be competitive selling, you know where to get out of your position. Right? This way you can do business intelligently and not be delusional. Right? So the sellers, John, on a move down, they initiate at the top of the candles. So they started at 58 and continued at 57 and continued at 55. Get it? And then when the sellers see that there are buyers, they will lift price to take advantage. Hey, P. Hunter, how you doing? So we're still waiting for this thing to clean up. London opens in 7 minutes. All right, so now, John, the sellers have initiated 55 and a half. Now, when this candle closes, right? Yeah, you don't take a position, right? I was looking for, so that's a great question, Avalon. Right now, I was looking for what they call the look below and fail. But when it failed, I knew that there were sellers here. So I was thinking about going long maybe 55 and a quarter, 55 and a half, stop under 54 and three quarter. But I saw that there was a persistent seller here, so I didn't take the trade, right? There's no reason for me to go long here, right? Because I know that these sellers are pretty highly competitive. Now you watch the top of these candles, right? Would I short this here? Well, if I did short it, my stop would be 55 and be looking for a cover somewhere in the 51, 52 area if I was to short it. But I know that they stop selling at 52, 53. So sometimes there is no trade. Sometimes you got to wait, right? This is the hardest thing about retail trading is knowing when to just sit your butt down and not do anything, right? In retail trading, this is how it works. The 99% of your time is going to be spent watching. 1% of your time is execution, as opposed to an institutional trader who's running 200-300 trades a day for clients, because you're moving inventory back and forth, right, on different stocks or instruments or whatever. A client tells you, buy me 1 million shares of this. Another client says, sell 200,000 shares of this. Another client. So you're working those orders. That's completely different than retail trading. Retail trading is you're waiting for the one opportunity where the market meets the terms and conditions under which you do business. If the market does not meet the terms and conditions under which you do business, you do not do business. This is how you save your money for when a good opportunity presents itself. So for example, had we gone short at 50, 54 and a half, right? Now, Avalon, if I was short at 54 and a half and my stop was 55, look at the chart. Would I have gotten stopped out given the price action right now? There's no such thing. I don't know what you're talking about. High market noise floor. There's no more trading floors, right? It's not a volatile market. So if I was short 54 and a half against 55, and what did I say? You'd bid the market at 53, 53 and a quarter. It's not the greatest trade, right? But mechanically it works. right? And if it can't hit your 53 and a quarter bid, you know you run out of supply, right? You know they stopped selling at 52 and a half. So you have to make a business decision, right? Is it worth taking the trade? Or should I wait for better business conditions before I put my capital at risk? Right? There's 53 and a quarter. There's no such thing as random price fluctuations. Just so you know. That's that doesn't exist. There's nothing random here. Orders are being worked. Business is being done. There's nothing random about it. If you get rid of the word random, it'll really help you in your trading. I don't know who came up with this random nonsense, but obviously they've never traded a million shares of a stock. So if you were short at 54 and a half, you had your stop at 55, right? And you see the offer moving lower, you can stay in your short. Just keep it simple, guys, okay? You don't have to get sucked into all this stuff about randomness and game theory and all this BS. Just watch the offer. Right now, the market's being put on sale. So that means anyone who's thinking about buying long should not. Anyone who's already short would be putting bids into cover, right? And if your bids don't get hit, that means there's no supply, right? There's no such thing as random in markets. There are no random price fluctuations. Price fluctuates because of orders and inventory. There's nothing random about it. There's volatility, right? There are thin order books, and right now the market's not volatile at all. It's nice and slow. So the next level, if we get underneath, right? Yeah, of course there's no buying coming in. You see the market's being marked down. Look at the tops of these candles, right? Where are my trend line people? Right? Trend traders. Right? Your trend lines like that, that means that the offer is being put lower and lower and lower. Why is the offer moving lower? Well, because sellers are competing. So John was selling at 54 and three quarters. I went 55 and a half. Mr. M went 54, right? Raj went 53, and the price is on sale. And now we're looking probably for VWAP. Right? This is a good inventory liquidation. This is really nice. This is healthy. This is what we need. So Avalon, do you see what I was saying? Right? I wouldn't have shorted here. You short here. When it's a look above and fail, then you got a place to put your stop. Right? In a volatile market, you have to use a larger stop. In this kind of a market, you don't. Hope that makes sense. And if it doesn't, just rewatch the video. It'll help. Right? And now we're going to come right back to the overnight point of control, which is our cost basis, which is eerily close to VWAP. So Mr. M, do you see how there's no buying coming in? Now London's opening. Let's see if we get down to VWAP or whether they front run VWAP and we go back up. Yeah, there's no such thing as random. Put $2 billion on a table and see if anything happens randomly. Right? It's no such thing. That's okay, Howard. It's the first trade of the morning, right? It's Monday. You're just getting warmed up, right? You made 2 points, and that's 2 points more than you had before you started. You're trading cautiously, right? That's smart, right? Don't ever beat yourself up for being smart and making a couple of points here, a couple of points there. Don't buy into all this BS about you having to make 20, 30 points a day, right? First, get good at being consistent and learning how to trade well, how to manage your business properly, how to make responsible business decisions. Focus on that. You're doing great, right? The money will come. Build it, they will come. Right? There should be a business reason for every trade. So a look above and fail of 54 and 3/4 should have us rotating down to 50 and a quarter. Now I haven't taken a trade yet this morning because I did a coaching lesson earlier. There's 50 and a quarter, so that's a perfect rotation. Let's see if 50 and a quarter has any sort of response. There's VWAP. You mean this green candle here? Well, we're underneath it now. Let's see if we get a bounce off VWAP. Yeah, so all that was the sellers letting the market breathe, and then they initiated right at the top of that candle. Pretty, pretty simple, right? Under VWAP, we're looking for that overnight point of control at 49 and a quarter. There is no reason to buy this market yet, right? There's no reason to buy this market until it shows signs of price stability. There's the overnight point of control. Right back to cost basis. That was a good inventory correction. That's nice. And if we can't get back under VWAP, you're looking for 48. So what I'm doing at first is I'm just looking to see whether my levels work. I'll try a little short here at 49 and a half. Put my stop at 50 quarter. Put a bid in at 48 and a quarter and see if I can get a fill. Hey Dan, how you doing? If I can't, I scratch. I'm flat. Was looking for any follow through selling down here. There isn't any. Right. Let's see, if we stay above VWAP, we should get some rotation back up to 52. We'll probably go back and forth over VWAP. See if this low holds. Yep, and the stops are here too, right? Sorry, I don't have these ones marked off. So this is a little look below and fail of 50 quarter. So if you go long a little bit here at 50 half, put your sell orders out at 51 and 3/4. Let's see if I can get a sale. All right, see if we get any rotation upwards. That could be a little early too. Another wonderful week. So right now I'm going to watch that offer and see if that offer, get rid of all these lines here. See if the offer stays above 50 and a quarter. So what I'm looking for here, I'm looking to see how strong that short bid is here. Because we did a little look below VWAP and fail, and then a look below 50 and a quarter and fail. But if we start, now this is where I'd have to use a larger stop, right? Because I'm long 50 half. So what I'll do is I'll use maybe 49 and a half, 49 as a quarter as my stop, right? I'm just trading micros just to test whether or not I'm with it. You've already seen me scratch one trade. Oh, look, 3 candles with the exact same bottom. So if that holds, well, it doesn't look like it's going to, right? It might take some time to clean up this liquidation. So if I'm not prepared to hold the trade, then I'd scratch it if it got down to 49 half, right? So now we know that there's going to be sellers here, right, at the top of that candle. There'll be sellers at the top of that candle and sellers at the top of that candle. So now you can manage your expectations when you're in a trade, right? Can we get a print at 51 quarter? Oh, printing at 51 quarter. Can we get a half print? See, now I sound like an auctioneer. Will anybody give me half? Nope, not yet. Right. And this way you can manage your trading. You can actually tell whether or not there's any buying. So if I'm long a couple at 50 and 3/8, right, on an average, right, you sell one at 51 and a quarter, you put out an offer at 51 and a half, and you sell into this strength, right? This way you're not, you're not taken by surprise. You know exactly what's going on. You can see it, right? You know where the sellers are. You know if you're long, and if nobody wants to buy your product, what do you got to do, right? What does a business person do if they're selling a product and nobody wants to buy it at the price that they want to sell it at? Anyone? Bueller? What do you do if you're a business person and you're selling something and nobody wants to buy it at the price you're selling it at? Come on, guys. There you go. Put it on sale. Right? It's not rocket science. Right? And you're seeing that happen here on the chart. Right? Put it on sale. Nobody wants to buy it at 51 and a quarter. Sell it at 50 and 3/4. Exactly. Yes, John, my VWAP is anchored at 6 p.m. every night at the New York Open, the Globex Open. Every single day, the same thing. Right? I use 23-hour VWAP, so session VWAP, right? So if you notice that, if you're long and you notice that nobody wants to buy your product, put it on sale and get the hell out of your inventory before it goes on fire sale, right? right? So here's the thing, folks. There's a business reason for taking a trade. I was long 50 and 3/8, right? And I sold one at 51 and a quarter, and then I sold the other one at 51 and a quarter, and I was trying to sell at 50 half, but nobody would take me at 50 half. So I just got out of the position before it came back under 50 and a quarter, right? I'm not scared to sell my inventory because I know there's another trade, right? And if I was holding 50 and 3/8 or 50 and a quarter, 50 half, somebody's putting it on sale at 49. What is the point of me holding inventory that's priced at 50 half? That just makes no business sense. Make sense? So you get out of it. Even if you have to take a little loss on it, you get out of your inventory, right? Businesses do it all the time, right? Prices marked down. We will not be undersold, right? Sometimes you can't get what you want, right? So you have to put it on sale. Otherwise, if this thing goes to 45 and you're long at 50, there's like no business sense in holding on to the trade. Do you understand why every trade has a business reason, right? If the business reason is not valid, right, or if you're in a trade and you see that people aren't willing to buy your product, why would you hold that trade? John, remember you were asking how do you hold trades longer? Well, that's exactly it. You buy a position and you put your sell orders out. If your sell orders do not get executed, that means get the hell out of the trade. Make sense? Like you want to buy a position, put your sell orders out and have the market go up and take your orders out. If your orders don't get executed, that's an indication that is the best indicator that you can ever have. Right? Don't worry about RSI or Bollinger Bands or whatever, right? Your best indicator is if you're long and you put sell orders out and those sell orders do not get executed, it means that nobody wants to buy your product at the price you're advertising it. Does that make sense? It's really that simple. So if you're in a trade and you want to hold it for 10 points just because you see a target, well, there's what you see and there's the actual reality of business at the current situation, right? So if you want to hold it, do you have the capital to hold it through a drawdown? And when your business reason is violated, why would you still hold that inventory? Any of this making sense? I hope so. Right? Now I see this. What is this? This is chop, right? This is chop right at cost basis, right? Is it worth me taking a trade right now? No. Not unless I want to build a position. And right now I don't feel like building a position because it's not exactly clear. Yeah, VWAP chop, not a good place to trade, right? So now you just have a coffee and chill. This way you don't get stopped out 300 times, right? And then you have a hissy fit, right? Let the market show you when it's ready to do the kind of business that you do, right? The problem with this whole retail trading gig is that they have gone and taken the most simple concepts and made them so difficult and so complicated that retail traders get stuck in all of this jibber jabber, right? And they don't actually think about the business. We've gotten so far away from the business that we get confused, right? By all this BS that people spout, right? On trading rooms and Twitter, right? Trading is about finding out where the buyers are. How do you find out where the buyers are? That's where the sellers stop selling. There's a little clue, right? The sellers will stop selling when they find size buyers. They will start to move price up, right? Until then, they will hunt and push price lower to find buyers. When they find buyers, they will raise price to get those buyers to chase them higher, to pay more, right? So if you focus on just a 1 minute candle chart and you look at the tops and the bottoms of those candles, you don't have to, doesn't matter what color the candle is, doesn't matter if it's a wick or a twick, or all you got to care about is where it prints. Now, what does that mean? Where it prints means where it transacts. Okay? That's all you got to worry about. There you can see that there are competitive sellers at that level. You see that the sellers are selling here. For me, John, it's usually 8 to 10. I don't trade huge size. And the other thing is, because we have a gap up and we're at all-time highs in Globex, I would rather scalp this than put a lot of money and conviction behind a trade. You know what I mean? When you go into uncharted territory, you don't commit a lot of capital, right? That's just common sense. So right here, I wouldn't really think, I wouldn't be building a position. I'm looking for scalps. Hey, ACS, what's going on? How you doing? Right. Most of the inventory is above us, right? Because we went and we sold all this stuff to people overnight. So it might take some time for it to all kind of fall down. So I'll wait and see where we get some sideways action before taking another trade. I've taken 2 trades. The first one was a scratch, and the second one was kind of a scratch too. So now that I've scratched twice, I know that just chill out, right? Just chill out. Let the market do its business. Let the wholesalers do their business. If we get any serious selling, we'll break that. You see the stop here at 45 and a half? Right, which is just under 45 and a quarter. It'll get down here. But right now it's just kind of bopping back and forth. It's like a little vacuum cleaner going back and forth, you see? Cleaning up all the contracts that are falling. It's just going back and forth, cleaning it up. There's no trade for us right now. And that's okay. Right, they're front running 48 because we can't get down there yet. Now, how many points is that gap? Where's our previous Friday's high was 31. Our low is what, 42 and 3/4. So yeah, that's a fairly decent gap, right? It's a big gap. Yeah, it's gonna be a long week. It's gonna be a long week. So, John, say if there was no gap, right? If this was just normal and we were, like, say the overnight was in the previous day's range, right? Which means business as usual, then the conditions would make more sense to build a long position, right? So if you were building a long position, it would be in this area here, and you'd be using 48.5 as a warning level, and then maybe 47.5 as your out, right? Now, if you were building a long position here, John, where would you sell? Where would you put your sell orders? Right? You'd put your sell orders right where these candles are, underneath it by a tick. So when the market went up, it'd take you out. So you're not looking for huge point gains when you're building a position. Because if you're long 8 to 10 contracts and you make 2 points, you get it? You don't have to make 30 points on each trade. Right? If you make 2 to 3 points using 3 to 5 contracts, right, you can minimize your risk. You trade less, right? And then you don't have to sit and worry about what the market's going to do. You know, make $300, $500, stop. Come back a little later, right? Preserve your capital, preserve your sanity. Right? Remember, we are uninvited guests in this business. Sure, they allow us to trade. They'll take our money, but we are really uninvited guests. So take what you can and give nothing back. Right? Now it's breaking that 48. If it breaks 48, 48 half, 48 quarter, you're in trouble with your position. So you must start lightening it up if it takes out those 48s. Right? And what did you see here? You've got to pay attention. Look, there's sellers right here at 49. Right? You've got to pay attention. You cannot, if you're building positions and you're trying to do stuff like that, you have to pay attention. You cannot let your attention lapse because you can't be slow. You have to trim and add contracts. Looks like you're going to get your 48 here, Phil. We're one tick away. I didn't say that, John. I don't know. Sorry, maybe I was unclear. I said if you were building a position, you'd be putting offers out. Like if you were long here, you would have offers at 49 half, 50, 50 quarter, right? Sorry if I was unclear. You short 51? Nice. Put a 48 bid in, Moran. Let's see if you get hit on one of your contracts. Coming up to the end of the session, does anybody have any questions? Hey, Richard, what's going on? Rafacio, welcome to the stream. I do not correlate at all. I'm of the opinion that you must look at the traffic of the street you are crossing. If you are crossing ES Avenue, do not look at NQ. You will get hit by a car. It's too many things to look at. I'm a great believer in simplicity. Right? If you're crossing a street, why would you look at traffic on another street? You're going to get clipped. Does that make sense? It's hard enough to pay attention to what's going on in one market. That's why 99% of traders miss very, very valid data points. Like here, the sellers are moving lower. See, look, offering lower, offering lower, offering lower, offering lower. Why would you be looking at NQ, right? Focus on what's going on in the market that you're trading, right? Just keep it really simple. People love to overcomplicate this, but most of them don't make any money. They just like sounding smart. I like to sound dumb and make money, right? I don't mind sounding like a simpleton. I just want to make enough money to pay my bills. No, Richard, it does not, right? So the lowering price has slowed down, which means nothing, right? As you can see, the price is going lower. So does it look like the market's going to go back up? Not right now. What you want to do, Richard, is wait for it to stop going down and to level out, right? The market is looking for the bid. It's looking for buyers. The way it's trading right now, I would be looking for the overnight low as a target, right? Let's see if we can get down to 42 and 3/4. Don't worry about sounding smart, people. Just worry about trying to make a living. And that's what we do at the tradingsyndicate.org. Please come visit us. It's cheap as hell to join right now. Come check it out for a month, right? And I promise you, you'll learn more than a month than you will 10 years anywhere else, right? There's no indicators, there's no mumbo jumbo, there's no double talk. We teach you how to make money in a simple, uncomplicated way. All you have to do is have an open mind and just be able to follow instructions. Thanks for joining us this morning. We'll see you at 9 a.m. Eastern Time. Let the market find the low. Don't get involved in this if you're trying to buy a dip, right? Let the billionaires find the low for you and then engage, okay? Thanks very much for joining me. We'll see you at 9 a.m. Have a wonderful morning. Trade smart out there and don't take candy from strange market makers. Bye for now.